4.5%. We want to bring in New York Stock Exchange CEO Dick Grasso. He joins us right now by telephone. Dick, good to talk to you. Thanks so much for weighing in.
Good morning, Maria. Always great to be with you.
Explain for us the turn of events that goes on, for example, at the New York Stock Exchange on a day like this. They put out a note earlier about the circuit breakers, and I guess the circuit breakers do not step in until a 7% sell-off. What will a day like today look like? What are you expecting?
Well, before we get to the intricacies of market mechanisms, Maria, I think your viewers have got to step away from this irrational depression that seems to be going around the globe. We have to remember the U.S. economy, and Anthony spoke about this, as have your other panelists. U.S. economy is strong. We've got low energy costs. We've got relatively low interest rates, a strong housing market, high productivity, banks in a strong financial position, and consumer balance sheets stronger than they've been in the last 15 years. So, I think you have to take a little bit of a step back and separate traders from investors.
Stock traders are stupid, right? Right, Dick?
Traders, Charlie, you nailed it a little while ago. Traders are there to trade, okay?
Absolutely.
The trend is their friend. If it's going down, they're going down with it, okay? They're selling into it. Step away from that. Remember, up until the late spring of this year, this has been the most hated bull market since World War II. And people were complaining about how many people, because of the March 09 meltdown, the 08-09 meltdown, how many people had missed a 7,000+ point appreciation in the Dow. So I think this creates a very normal correction to an upward secular bull market, and those investors out there who are investing for retirement or for college funding for their 8-year-olds or for buying a home down the road have a tremendous opportunity. And they'll look back in 3 years and say, what were we thinking? What was the market thinking? To the market mechanisms, Maria, yes, there are, call them shock absorbers that the markets have to cushion the volatility both on the downside and on the upside. But look, as China is learning the lesson, you don't manage the market artificially. What a lot of people forget is that Shanghai doubled in 12 months. It's now given that back, or giving a lot of that back. You've got to let the market find its own level.
Mm-hmm.
Hey, Dick, it's Charlie Gasparino, your good friend and
hey, Charles, how
constant
are you?
irritant for your entire career. Who do you like in the presidential election? Has your buddy Langone put the arm on you to support Christie, or are you going to do something brave like support Donald Trump?
Well, Ken has not been out there raising money for Chris. As you well know, Charlie, Chris has been a favorite of mine for a long time. But there are some, look, with 17 candidates in the race, anything can happen. And while Donald has, I think, a very impressive lead at this point, call it, he's polling somewhere between 25 and 30%. That means you still have somewhere between 70 and 75% voting for someone else.
Well, you had a personal relationship with Hillary Clinton over the years. Do you still have that, and could that ever translate into you supporting her?
Well, when she was in the Senate, she was a fabulous representative of the people of New York, Charlie. And I have to say this, right? She took the time to understand the financial markets. She took the time to appreciate how important the New York Stock Exchange was, not just to the state of New York, but to the United States being the capital of the world. I mean, she was a real student and supporter of ours, and I think the world of her from that perspective. Look, there are lots of things I wouldn't agree with respect to what she's currently talking about. But I'm at heart an independent, always have been, Charlie. I'm going to look at whoever the two nominees are, and frankly, at this point, I think it's very hard to predict that. Anthony was saying, a few minutes ago that, this time, the last cycle, Herman Cain looked like a shoo-in.
Yeah.
And you can't predict what's going to happen given the volatility.
Dick, do you expect a worsening of this market as interest rates go higher? We've been talking with John Hilsenrath this morning.
But gate that a bit, Maria. When you say interest rates going higher, interest rates are at zero.
Right.
Okay, and you're not talking about interest rates looking like they did in 80 and 81 when the government borrowed money at 15.75% long. Okay, you're talking about maybe a 1%. Rate.
Hey, Dick,
that doesn't hurt economic growth.
All right.
That
Dick,
doesn't in any way depress the entrepreneurial spirit we have in this country.
So,
look, we're in a great position.
Yeah.
One of the things, and I'm a great follower of the writings of Brian Belsky from BMO.
Right.
Over the last 5 years, it's been China, China, China. I think over the next 5 years, it's going to be the U.S., okay, and the U.S. economy leading. Now, look, 2% can't remain. We've got to get people into office and people into both houses of Congress that want to do something.
Yeah, which is why this election is so important. Here's John Hilsenrath.
Dick, I want to talk to you about these markets and retirees. What do you say to people like my dad out there who are getting no returns on their fixed income investments because interest rates are so low? And then they wake up this morning, they hear us saying the economy is strong, the economy is fine, and their stock portfolios are going to open down, another 600 points. What's a person like a retiree supposed to do when they've been pushed into stocks and stocks are now tanking and fixed income is no place to sit? What do you tell them?
Well, hopefully they haven't been pushed into stocks that are on the extreme edge of the risk curve, John. There is a very strong case that's been made over the last few years that you want an equity portfolio that looks more like a fixed income portfolio. I think fixed income, by the way, you are going to lose more money in fixed income than you've ever lost in the stock market over the next 5 years.
That's where the bubble is.
In treasuries, Dick, it's Dagan McDowell. In treasuries?
Dagan, whatever the instrument, the longer the duration, given the propensity that rates are going to rise, not flatten or go down, you're going to lose a lot of money.
But Dick, wait, let me finish. But Dick, that's what people have been saying since the financial crisis of 08, that bonds are in a bubble, bonds are in a bubble. And if you bought, anytime there was an uptick in yield, you were making money in treasuries. And individual investors have been selling wholesale domestic equity funds for years. And right now, they look right and smart.
Dagan, just remember one thing. Whether it's the fixed income market or the equity market, you don't lose money until you make a sale, okay? And I think that's a very important discipline in periods like this one.
A good comment.
Can I just ask him one political question? Dick, are you going to run for New York City mayor against Comrade Bill de Blasio? And do I get that sanitation commissioner's job? If
Charlie, do I take from your question that you are still angling to become press secretary?
I said I want sanitation commissioner. I'm going.
No.
He wants to be president of the Restaurants Association.
By the way, my dad worked for the New York City Sanitation Department.
I love the idea of Charles Gasparino, deputy mayor for economic development.
So what are you saying? You're done? You're not going to do it, Dick? You don't want to enter the mayoral fray?
I think there is a portfolio of great potential candidates for mayor of the city of New York.
All right, Dick, great to talk with you as always. We so appreciate you weighing in this morning on an important day for the markets.